Secret channel for learning about trading and investing. Welcome to Quick Market Analysis for tomorrow, April 18, Tuesday, 2023. We will basically be looking at what happened in the market during the day, try to learn something from it, and then plan for a better trade for the next day. Right. So here we go with the chart. Yes, a retracement that is due. That's what happened in Nifty. 9 days of consecutive up move, stopped abruptly with and the close has happened with a hammer, a red hammer, not a higher close, and a bounce up that has happened from moving average of 100. Momentum has taken a support, right? That's what you see. These are daily time frames of Nifty. Banknifty, you have an exact hammer, better hammer, and managed to close green, and momentum is intact. And that's what you see. So what's in favor of the bulls? Banknifty managed to close green and a hammer, green in the sense close positive, right? Not a green hammer. The hammer is there because open was much higher, and it managed to close 0.31% up, despite the fact that it was carnage that happened. 250 points of fall happened in the Nifty in the morning. Later half of that is retreat, but despite that, the Banknifty is absolutely intact, right? Then that's definitely a fact in favor of the bulls. Nifty has now taken a support, and as I said at the beginning, it was an overdue after 9 days of green candles. That's and the fall has not been. Half of the fall had been recovered, and that's what the hammer. That means buyers are there out there. It cannot fall beyond that. It bounced up. Immediate buying came in, and then it bounced up. And probably there is a range shift momentum that can happen. Momentum range shift, the concept of the price shifts from one range to the next range and takes a support at the top of that range. So RSI 60 is a support zone, and that's where the Banknifty has taken the support. So it's a momentum support, which is a range shift concept, and it also has a possibility of a change in polarity bounce, where the previous resistance is taken as a support and then a bounce up happens from there, right? This is also in the Nifty, right? This is a zone which was a previous resistance, which is where it has taken a support now. Now there is a probability that price can take a bounce up from here. So those are two things that can be seen from the charts in favor of the bulls. The Banknifty brought the major resistance. We know that it has taken out the trendline channel, the previous swing high, the budget day high, previous breakout zone, all that has happened. We all know that. That's anyway, except the small deeper retracement that has happened. Nothing much has been hit hard in any of those with regard to the Banknifty. Nifty also managed to close about 17,700. That's a good rounding number. All right, although it had dipped and breached even the 17,600 level actually, but finally the end of the day, it's what matters. It closed about the 17,700. Nifty comfortably above the 42,000. Banknifty, I mean. So in favor of the bulls, and momentum is intact in the bull zones, the short term trend intact in the bull zones, short term. All the indexes 20, 50, 100, 200 DMA all down there, in both indexes. Only band still in the expansion mode, although Nifty has fallen down from the walking of the bands, and it's still having a bullish back, the price above the median. As today saw little, but 9 days they had been buying. So even if there was a selling today, it was just a small quantity of selling that has happened. And the India wicks and even the DI is also sold, but it's a small quantity of selling was all that happened. The India wicks has spiked up just 3%, right? So it's still in the low regime of 12.2 despite the crash. Even while the IT index has got hit, that is the root cause of the fall that happened today. And the index got hit, and it's in the bearish momentum. All the other sectors, the FMCG, pharma, realty, auto, they're all in short-term bullish momentum. And metal is also hanging on and then reaching there. It's a sideways right now and then rising. Also, if the major index elements or heavyweights that constitute the most, the Nifty 50. If you see that, they're all in the bull zones except the Nifty and TCS. And Reliance also is almost getting there and rising up momentum from the sideways, rising up. So overall, things are not bad with regard to the heavyweight participation. The heavyweights constitute the Nifty, and also the major 7 industrial sectors that we analyze. Now, the US indices is the mother market, and then it's having green and it's nice bullish rising, bearish. It's not ready to fall down. It's at the same zone in the top of it is being wedged, and then probably it's trying to break out and feeling the selling pressure. So it's a crucial zone, but still it's not in a having a bearish momentum. The momentum is still short-term bullish in most of the US indices, including the Dow Jones. So that's in favor of the bulls. Now, what's in favor of the bears? Today has been in favor of the bears a lot because of the 250 points of gap down that happened in the Nifty, but half of that is retrieved and finally a red hammer. A hammer sometimes on the top of a trend could be an indication of a reversal, but that's valid only if the price is breaching the low of this hammer. So as long as the price is not breached the low of the hammer, you don't have to worry about it. But that gets added up with the favorable things for bears indicators. ID index is 4.7%, single day drop that has happened, and it's a bearish. Nifty had fallen down 9.42, which gives you plus 1.5%, despite good results. Nifty, because of bad results, obviously circuit low. All these are the things and the drama that happened today, so that's not that great. Remember, we are 3 weeks retracement of 11.5, 12.5 kind of retracement, and then we recovered 6 to 9%, and now we're pulling back a little bit before we take the next leg, is what I feel. But yeah, we have to keep in mind that we are in a downtrend. We just narrowly broke out from that price action level of lower high. FS was selling impressively since the entire of the March, and prior to that also since the last 2 years, and it was just 9 days that they had been buying small, and today again they have fallen back to a seller, which is again in favor of the bears. This market is a crucial, so it's a good thing and a bad thing. It is not ready to fall down, but at the same time it's in a condition zone, resistance zone. So that's another factor. And crude oil is again spiking up in its 82 levels. Remember, it was at the 65 levels a few weeks back. So that's not good for a crude embodying country like ours. It's weakening and spiking again today. It's back to the 82 levels and it's not cooling off below the 80 at all. Despite the fact that the dollar index has cooled off, that's not reflecting in the rupee. Although it's not directly correlated, the dollar cool off is not reflecting in the rupee, and it's weakening, remains weak. So just to summarize, what's next? So basically today we had a correction that was due on Nifty especially. And markets did that and retraced, formed a hammer, showing the bullish support down there, and that recovery happened, and then probably there may be retracement some more and consolidation somewhere at this zone, and as long as 17,500 and 41,500 levels are not reached, it should be okay to have some call up before have the next leg of rally is what I feel like, because the momentum in the trend is still in that. The bands short term we're talking about, Bollinger Bands are in the expansion mode still. Banknifty is in that, weeks is slow, still in the low regime, not although it's spiked a little, and Fyers generally has been in the buying mode. Selling was the first time after 9 days, and at least in this month, and 9 consecutive days of buying. Fyers generally had been, unless they break that in the coming days, they're in some kind of buying mode. Bullishness or open interest also is some kind of bullishness, is although we had a bearish move that happened, and indices also kind of green in the top of the wedge and rather than the bottom of it, so that way market use is also green. So overall, as long as it does not breach that 75, it remains mild bullish, despite the fact that we had a downtrend today. The group resistance stiff about the 17,800 to 18,200. That was a very crucial. Several resistances are there, but it may consolidate, take its own time and then take, before it moves, ultimately its direction is in the upside rather than falling back the channel again is what it looks like. Resistance of the medium term is 18,000, 18,450, 43,000 and 43,600 on the upside. This is a mistake. It's 43,600 Banknifty. Swing low 16,650, 16,750, 38,600, 37,400 in Banknifty. Right. So the levels. Just for check out the open interest exactly. Right. So the build up that we had was on the future SOI is bearish definitely, but Banknifty it's solid green. Right, so future SOI it's only the it's the Nifty that is showing created a short build up, but a lot of resistance around the 18,000 and between 17 and 18,000. That's what the struggle is. Banknifty is stronger, which is very good solid support at 42,000 levels. Very good. It reached that today, but it still managed to come. So that's a wrap up. Might be a bullish view for the next days, but there could be heat up there. Retracement could extend a little more and turn out to be some kind of consolidation before the next legs may come in. But while bullishness remains as momentum trend and all other indicators are still more or less the same and Banknifty is intact. Right. So that's the summary view. So if you're not subscribed, please subscribe and share it to friends. I appreciate your help in this one, and then it keeps us motivated doing this every day. And if you're subscribed, please if you like it, and comment and give me your feedbacks. And if you want to avail the premium services, check out the description for the Telegram channel services. Right. That's all. Happy trading, happy learning, happy investing. Bye bye.